Welcome back, ladies and gentlemen, to Climate X's channel, a carbon exploration company that can access and develop the highest quality forestry and marine carbon sequestration projects. Joining us, James, the Chief Executive Officer, is going to give us a kind of a high-level overview of where the company sits from more or less the financial side today. But first and foremost, welcome back, sir.
Great to see you. Thank you.
Love to have you back on. So let's get right into this for some of the questions and just to offer some clarity, because for newer investors, can you discuss how you take advantage of carbon credits, kind of how they work in the long-term sustainability of them for your business?
Yeah, absolutely. So the demand for carbon credits is coming from large corporations that have made net zero commitments. So they've said they're going to get to zero emissions by 2030, 2040, 2050. That's created this huge volume of demand, unprecedented volume of demand, that Mark Carney and the McKinsey and various other reports have said is going to lead to a 15-fold increase in the size of the market by 2030. So unlike any time in the last 20 years, the demand is very strong. And the companies that made these public commitments, are being judged as ESG stocks now. And the regulators in the EU and in the US now are increasingly saying, look, if you're telling investors that you're going net zero, you have to have a plan for that. And you have to show how you're going to achieve that and deliver on it. So we're the supply side of that problem. We look at what they believe they can reduce in terms of their own emissions, and then we look at the supply of carbon credits that they're going to need in order to be able to hit that net zero target that they've then announced. So any company that's taken on new investors or is trading stock and said it's net zero has to have a plan to fulfill that, otherwise they're offside with the regulator. So our approach has been, okay, go upstream, find these projects, de-risk them, be like a oil and gas exploration or mining exploration and development company, get all of the technical aspects of the project de-risk, spend our own equity on that. In the past, what you had to do was spend your equity developing the project all the way through, produce the tons. When the tons were produced, only then you could sell them. In this market, where the market is so short of credits, we're able to negotiate pre-purchase agreements. So that's part of the reason our approach looks so strong is, in Sierra Leone, we've spent $2 million US securing the land rights, doing the development work. We have a project there which will produce over 25,000 hectares of restoration initially, represents $580 million in cumulative revenue over the lifespan of the project. We only spend $2 million getting that project de-risked. And then the pre-purchaser says, okay, I'll fund all of your tree planting and restoration efforts in return for guaranteeing access to the credit. So we don't even need project finance in those cases. We're able to do these pre-purchase structures where they put the money in, we pay them back in tons. So it's a very, very lean, efficient asset manager and development model. And these market conditions right now are, in the 20 years I've been in this space, totally unprecedented. But we did the bidding process. We had 16 different groups, from the largest trading houses in the world to some of the largest emitters in the world, looking at our projects, and we've ended up with very, very strong interest in the project and very strong term sheet that's been announced as well.
Well, I definitely appreciate those insights. And speaking of unprecedented, I just want to point out that on your last interim filing, you had just over 3 million of liabilities and about 20 million in assets, which is really unusual across most businesses these days. So I wouldn't mind just discussing, the low debt. How do you feel about your balance sheet and just kind of the impact of this current recessionary environment?
Yeah, so our liabilities really just reflect future obligations for payments. They're not debt, so there's no third-party debt within the company. We've raised our own equity. We fund our own overhead and costs and our development work and salaries. We've kept that extremely lean as well. So we have really strong consulting and performance-based contracts with our technical teams. But unlike many other companies in this space, I didn't want to build out a team of 30 or 40 consultants in-house and have to worry about that overhead. We have less than 10 employees. We have very low burn rate, and we focus all of our equity the 10 million that we raised initially, or 9.7 million, we focused all of that on project development costs. And then we fund projects and secure the capital through pre-purchase agreements. And then 100% of the revenues from the sale of those credits flow back through the business. So if you want to get sophisticated and think about return on equity, we turned $2 million of initial investment in de-risking and exploration costs into $580 million of cumulative revenue from our first project. And that's honestly experience, 20 years experience in the sector, having seen what happens when you build up too much consulting and overhead in-house, you detract yourself from your core mission, which is, get the money into the field, fund these projects, and do that over and over again. So we have the first 25,000 hectares, 10% discount rate. The NPV on that project's around 30 million. We have a further 32,000 hectares already under agreement, which is about another 40 million NPV at, what's a very high discount rate at 10%. We have cumulatively about another $40 million of NPV from projects within our pipeline, but our cumulative revenues now over the lifespan of these projects are pushing $2 billion. And the validation of that ultimately, it's great to get validation from investors, but the validation ultimately comes from, the companies needing to commit to net zero by 2030, signing up to be our customers, and that's the kind of validation we're seeing now.
Yeah, that's very clerical. I really appreciate that. You talked a lot about the revenue streams there. Do you want to talk a little bit about milestones, what investors should be looking to at the latter half of 2023?
Yeah, so our announcements up to date are the pre-purchase agreements. We'll be announcing new jurisdictions. So we've already announced that we have development work underway in Baluchistan and Pakistan and Suriname. So we expect to see those finalized in Q2, Q3. By the end of the year, if we look at Q3, Q4, we'll be completing potentially first transactions on our mangrove conservation project, what's called project design documents, which are a sort of technical document in the carbon world, but are really like a forward-looking statement. Like you can think of them, if you've looked at oil and gas or gold, you can think of them as being a bit like a reserve statement. They're not regulated, but they are third-party validated. So we'll have 3 of those completed by the end of this year. But we're also just going to keep layering in new jurisdictions and new project updates, through the course of the summer and into the fall. We're very, very active in West Africa now in 2 other countries, trying to replicate the deal agreements we have in Sierra Leone. And for these countries, the benefits from these revenue streams are transformative. I always need to point this out to people. It's fantastic for our business that carbon revenues are driving this investment into carbon, but our impact on SDGs is enormous. So we have sustainable development goals around alleviation of poverty, provision of biodiversity benefits, alternative livelihoods, and we'll share a lot of this information over the coming months. But in a place where people live off $1 a day, when we employ 2,000 people on our 25,000 or 5,000 hectare project, it's transformative in those regions. It applies unemployment where people are living hand to mouth in communities where they have very few alternatives. The same is true of our mangrove projects. Same is true as we expand into other parts of West Africa. Even in Mexico, within the regions where we're restoring mangroves, we're rebuilding fish habitat. We're providing hundreds of people with employment on the restoration work. And it's the sort of silver lining around the climate story is smallholders, poverty alleviation, is the way that you reduce deforestation pressure, because people don't want to cut down the trees that surround them. They have no choice. But we provide alternative livelihoods and income to them as part of the benefit and employment agreements.
Well, I look forward to seeing this story to continue to evolve. And if you'd like to see this story evolve, consider subscribing and let us know what you think in that comment section below, because obviously as news hits the wire, we're going to continue to update you here. But on that note, as always, we look forward to catching you in the next one.